Good morning, everybody. I am Mark Sebastian. I am your only option. Happy Easter Monday. Sad day for us Catholics with the passing of Pope Francis. God rest his soul. And, the market is red in sympathy, I believe. As I'm looking at things, the S&P 500 is currently down 100 points, good for 1.9%. The triple Q down 2.25, the Dow down 1.75%. We continue to see those market leaders setting us lower. 1 second, folks. I'm getting a big glare behind me. All right. Did the glare get any better? Not really. All right. Well, we'll have to deal with the glare, folks. It's a sunny day. It's a sunny day in Texas. So, again, markets are really under some pressure. And why are they under pressure? Well, if you want to share my screen, Justin, we've been talking about different levers, that affect the market, and where the market is going to go, and yada yada yada. So the three levers that we've been watching have been what? To start, the bond market. And that is where we are seeing pain today. TLT has kind of broken out of this nice bullish area and is now starting to threaten back to, into the mid 80s. And again, if we kind of break some of these levels, we could threaten October 2023 or break those levels. The bond market breaks, the stock market breaks. You have to understand that. That is key. The bond market breaks, the stock market breaks. Remember that, folks. So, what do we get out of it? We have a VIX that's up. Now, it's not up that much. Heck, we're currently not even above kind of where we, basically where we were on Thursday. So VIX still above 30. And that VIX term structure that we keep talking about at about 1.2. So it's not in that like super heightened 2-3 point range, but it's been hovering between about 1.2 and like 0.6. And then we finally continue to talk about the Russell 2000. Now, again, this is why I think coming out of this, the bull play is going to be the Russell 2000, along with the bond markets. But I think in kind of the immediate move is going to be stronger in the Russell 2000 than in the Qs or the S&P even. And, it's down the least today. And could make for an interesting play, when markets finally calm down. So, looking at my three levers, we're still in kind of this no man's land. Today, we're going to be down, but we could rally this afternoon. We could tank all day, and then you see the rest of the market kind of bounce tomorrow. I mean, there's really no telling. What I will tell you is the dollar is weaker and bonds are weaker. It's usually not a good thing. Gold is up $99, having itself a nice day. Silver is up as well. So you do have a flight to out of bonds, out of dollars, and into gold. All right. Let's kind of that's kind of our narrative today. So let's talk about what things look like and how much we might move today. Currently, we're down 100. All right. The those Mag 7 names stink. So let's look at the SPX. I want to look and see how much we might move today. Sorry. And what's interesting is we're down 100. Since 950, we have fallen from 52.12 to 51.80, 32 points in 13 minutes. And they're going to charge me $50 for the rest of the day. I'm just going to go out on a limb and say that's probably a little underpriced. Probably a little underpriced. The Qs. They are currently pricing in, about, well, I'll call it $5. And again, doesn't seem very inexpensive. It doesn't seem expensive. I want to remind you that, I'm going to be here with you for another 20 minutes. Then immediately following, stay tuned because Hans and I will be back to go through our ticker highlight show. What is my rationale behind the options maybe being a little bit too cheap? Just how much we've moved relative to the overall cost, right? The market opened 42 minutes ago and we've moved 100 points, and they will charge me less than $50 to look at the rest of the day. What I would say about it seems a little cheap. Is it something I would want to buy? No. But is it what if you forced me one way or the other to buy or sell, I would want to buy it. That's what that means. Now, what I'd like to do is kind of take a look at the order flows that we have here. See if there's anything compelling, interesting, and I'm going to talk about it. And this morning, volumes coming in. The biggest trade is in a Taiwan Semiconductor. And you have some action in gold. So let's take a look at this trade in Taiwan Semiconductor. Taiwan Semiconductor earnings are already done. Traders sold the June 145 call with Taiwan Semiconductor at 147. So an in the money call. And then bought the August 135 call. August 135 call. What do you think this trader was doing? I'm going to tell you. The June 145 calls, 39,641 on the tape, right? 30, 39,600 in two trades right here that went up simultaneously. Look at the open interest of 41,000. What do you think this trader was doing? Blue Dog says it's a box trade. No. This is a stock replacement play. So the trader actually owned the 145s probably when the stock was much higher and wanted to use calls instead of buying the stock to save themselves margin. Well, you look at a stock chart, it's not like things have been that great for Taiwan Semiconductor in the last month. So they sell that call and they buy the August 135 that doesn't have any open interest, and that is their new long stock position. This person is buying themselves time in hopes that the stock goes up significantly. They're hoping. That is what they're looking for. All right, we're continuing to melt down, folks. Looking at my meters, 5170 down to 5153. Today feels like we could melt further. I think it's worth going out and buying an SQQ call or a TQQ put or a QQQ put for that matter. If I was looking at SQQ, currently 4156. Fridays, 42 calls are $2, $2.10. Those are probably a good scoop. I don't know that I want to hold them overnight, but today feels like there is potential for things to really melt. Just has that feeling. Because the bond market, so let's take a look at what bond auctions we have this week. We have a 70 billion 5-year on the 23rd, a $7 billion, a $44 billion 7-year on the 24th. 2 years won't. Watch the 5-year on the 23rd. That's Wednesday. That's the one that could move things. So with the way we're melting down, as I stated, I would be looking at an SQQ. The 42 calls are currently about $2.15. If we really melt, those are going to pay you. Those are going to pay you well. Speaking of paying you, you know, we are, for the first time ever, I am doing a masterclass across kind of everything I do. So we're gonna, I just showed you a little instance of what, how to interpret order flow. So I'm going to do an entire section, so 2 full classes on reading, interpreting, and trading off of order flow. Then I'm going to dig into VIX, volatility, and how I trade, use that to trade things like strangles, non-directional trading. Then I'm going to go through 0 DTE, and then we're going to talk about long-term trading using a specific type of spread that I use that's super easy to learn and understand to buy stocks at, that I think are eventually going up or down at, about 80 to 90% less risk. And my goal is that, one, in this environment, everybody should be trading. It's a way to make money. But a lot of people don't know where to start. They don't know what type of trading suits them. And if they think they have an idea of what type of trading suits them, they don't know all the risks of what they're doing. And I intend to solve that for you guys and give you really the deep dive under the hood of kind of how I look at every trading strategy I run and how I look at the trading strategies that my traders run, what becomes suitable and what isn't. So I would like you to, join me in this masterclass. If you have interest, just give my team a call, 888-872-3301. Let me put that in there. So I would like to, offer you the opportunity to join that. And I think, and we can drop it when, here's your order form. If you want to look at it, we're only doing, it's small group. We're only doing 25 people in the class. And I'm going to kind of walk you through the 4 strategies plus some bonuses. So I'm looking forward to trading this with you guys. So you can call Ted, or you can click that link and join me in this masterclass. And I'm really excited to be doing it with you guys. Yes. All right. So I gave you the SQQQ idea. An alternative, if you think bonds are actually absolutely going to explode lower, like if you think the bond market's about to fall apart, and the bond market does not look great. I mean, the 10-year or the 30-year is down 0.5%. What's the class schedule? First class will be Thursday. And then the classes will be Thursdays at 1 o'clock. Oh, Fridays at 1 o'clock. I'm sorry. When I said Thursday, I meant Friday. So, like I said, I think this is a really good opportunity to figure out what kind of trader you want to be, what kind of style you want to take, how much time you want to put into it, and then I am gonna kind of walk you through how to approach that filtering process. And if you guys are extra good, I might even bring in a guest or two to help me with a class. Some people you like. Yeah, VIX. This bond market is a real problem. So, folks, I need you to add IEF and TLT to your ticker trackers if you are not, and put them in somewhere that you look at them, because they are going to instruct you on this market. And it's important to track kind of some of the overnight movements too. So, for instance, I'm going to change this to a 5-day, 5-minute. And, this is what spooked markets. From 4 a.m. down to about 6:45, bond market was just got pulverized. That was down all day, but it got absolutely pulverized over the course of about an hour. And you will notice that is when S&Ps really took a dive. See? So the bond market is dictating what is happening. So if we recover, it's because the bond market continues to calm down. But so watch the bonds, and then keep an eye. That's kind of like it's currently the star of the show. But you obviously want to pay attention to the Russell and VIX as well. But bonds are really instructive. And bond volatility is instructive. TLT implied vol is just below 20. That's your stress levels. When TLT vol gets into the 20s, that's when you know there's some real stress on the bond market. So that is another thing to keep track of. All right. Well, it is 10:27 Eastern already. In today's session, I kind of updated you on the levers, kind of informed you about the bond market and how it was dictating things, showed you how last night the bond market basically forced the S&P lower, and how that bond stress is getting into the stock market. We talked about the fact that I think IWM is going to be the leader when the market does find a bottom, and kind of explained why. And then we looked at VIX, and I told you exactly kind of those levels to watch on the futures and VIX overall, and the fact that VIX 9-day was now positive again over VIX was made a note. I shared with you my kind of near-term trade, an SQQQ call. That's kind of what I'm doing, what I think is an idea near-term based on the selling that we're currently getting. And then we talked about this masterclass where I am going to be guiding you through my thought process behind all of the trading I do in order to hopefully find you that perfect style and educate you about all you need to know to trade it. Whether it's I want to be doing day trading to I want to kind of kick back and trade once or twice a week, or somewhere in the middle, or I want to trade once a month. We're going to find that strategy for you. So I want you to join me in this masterclass, and you can do that by clicking the link and joining here.